let's go back to the elden time. JK, we're not doing it. Let's look at what we have now, right? And let's say this is the low. Let's just say,
Yeah.
okay? Let's just say this is the low, which it is. This is on the week, right? Move. When it hit this low, there is um a area in which it has to find value before it hits that low. So let's say this is a markup. This is the high. This range. This is a previous high. So technically the low, whatever. Let's just say that this is the area. This would be the second short position continuation. So under this, any rejection of this, you short it, right?
Hmm.
This is now the median, the high again. So this would be an excess low.
Yeah.
All right. So obviously you want to wait for the turnaround, but the excess low generally goes to a new low and or a new area of value. Generally, when you're looking in the market, it returns to a quarterly value or yearly quarterly value. That's a fundamental financial analysis thing I can do another time. But generally, if you look at the quarters, you'll see it return back to a previous value, right? So it comes down to here, quarter happens, comes right back down, markup, right? Here's the quarter, it runs. Here's the next quarter right here, taps it again, see, finds it,
Hmm.
markup. Here's another year. So these are yearly, quarterly values in this scenario. 12, 23, 24, et cetera, et cetera. When it touches the yearly, quarterly value, whether it's a quote unquote correction or not, it always returns back to that quarterly value because those are where the financials sit.
Hmm.
Positions are taken depending on what investments were taken at that time and the size of those, right? So those have to fall out of that, which means that there's still a bottom amount of shares somewhere, which is generally taken after an earning or something of that sort. Before we got into Bizarro world where earnings. So
You're cutting out, bro.
I said, but before we got into Bizarro world where earnings didn't matter anymore.
Ah, feel
So
you.
as you can see, it's always been like this, right? So 2014, they're like, oh,
Hmm.
it's a correction at the beginning of the year. No, what happens is the first 3 to 4 months, it's tax time, so money's coming out of the market. People have to pay taxes, right?
Hmm.
So in the first 3 months, the flow in the market isn't going to be as strong, all the way up until April, and when taxes are over. So if you were to look to this thing, April, market
Hmm.
happens, people start shorting or people start lowering it back in the year. Summertime comes, shit dies off, and then as I tell you guys all the time, October the market runs again. You likely can hold up until December, but if the market starts again, it'll be short. So you're gonna see that happen. Cycle,
Hmm.
summer, die. Later on in the year, October-ish, you long. November, December, good, and generally a baby correction beginning of the year until April. Again, see,
Yeah.
happens over and over and over again. So that's just part of seasonality. So when we're going
Hmm.
down and we're looking at value in this time, well, we need to figure out where the market is. The beginning of the year, January, taxes, same thing. April comes, now flow can go back into the market, right?
Hmm.
And there's the markup. So here, high, the low. This is the first short position on an attempt after an insane markup, right? Here's a continuation, boom, gets over that, short again, boom, two positions. If it holds over this is an encapsulation, so this is still the mid, but now it's a value mid, whereas to when it's coming from here to going there, it's the it's a high of the mid. This would be a low of the mid if it were holding it, right? Because from here to here, that's actually resistance, but from here to here it would be support. All right,
Yeah.
kind of, yeah. So that's how you got to kind of think about it. So all this in the middle, like for
Hmm.
example, like this is obviously an excess high because this is the high,
Yeah.
right? This is the high, second high. This is the high of the high, right? That's why you have this first attempt short because this is the first excess high.
Yeah. So it's
right?
the first retaliation.
This was the first short retaliation
Uh-huh.
exactly for this one. This is the attempt of the high. This is the new high. High. This is the high of the high or near the high.
Hmm.
That's the retaliation. They got to get it back down here. Your second short position. So now that all these shorts are green, right? They can now begin to start cutting that position here. And that's why
Yeah.
you get this big up, down, because every time they cut it here, it has the potential to come back up and hold it, right?
Hmm.
But every time these shares are bought again, you can reshort the same exact position. So until it holds this as value, this is short, right? Um, and this now, because there's a new high, is temporarily an excess low, which is why you get this huge reaction. See that? It comes down here. The next day, it doesn't even continue. Well, the next week, it doesn't even continue. It just fucking runs, right?
Yeah.
Because that's what makes that an excess low at this point. Because it was the low, but because you got an expansion on price, you got a new high. This is now an extreme discount because the low should actually be somewhere around here, which is why you get boom, boom,
Why should the low be there though? Around like 2660s.
because of the price increase. So you get a price increase here, right? And
Yeah.
like it's basically a specific range. Like generally when you breakouts on the daily charts, like right on the
My
weekly
bad,
chart.
bro. You're cutting out again.
Yeah, like it's
Hold on.
like it's too low, I think.
Yeah. Can you hear me now?
Yeah.
Hello.
Yeah.
Okay.
Can we
Generally,
put
when you
the volume up on TeamViewer or not?
uh, did you wait? What'd you say?
I wonder if you could put the volume up on
I'll
TeamViewer.
turn it up more. Is that good?
Yeah.
Okay. So
But my bad, bro.
no, you're good. So this expansion, right, on a daily chart, a good range is about 150 points, right? Not
Yeah.
on a day, but within a breakout of a period. When you're
Hmm.
looking at a weekly, you're looking more at like 300-ish points, right?
Yeah.
So once it expands further than that, generally it's a pretty big push. In this instance, if you look at all the moves on the week, right? Let's say this is 2750, 150 points would be about 2900, which is somewhere around here, right? This is about 150 points. This is just like how it trades now, right? Like if you look at these moves, 2700.
Are you moving? Are you moving the mouse?
Yeah, you don't see it. Oh, my bad, my bad.
I see now. Yeah.
All right, right here is 2700, right?
Yeah.
Around 2900, that's when you start to get a little bit more of that resistance because it's
Mm.
trading out of its normal range. Whereas to here, we got the price increase, and when the price increase happened, it happened on a trend, right?
Yeah.
So once that trend was broken, for example, it comes down and it's trading out of its normal range. This is an anomaly for this amount of time, right?
Hmm.
Being that you got this price increase, you can only expect it to have increased on the low end. It's basically like, as I explained to people, like let's say you were to buy a PlayStation for $300, then the demand goes crazy. Now it's 600.
Yeah.
The chances of it coming back down to 300 is nil, right? Because a bunch of
Hmm.
people are going to buy it at 350. They're going to see that as a discount because it was $600, right?
Yeah.
This price increase changes the potential for it to actually touch this low again, right? And
I
when you
see.
have that on top of um, the seller's retaliation,
Hmm.
it just makes it even worse because once it comes down here, they're trying to close the position, right? So this at the time
Hmm.
before it came down and cracked was an excess low. So on the week, you can actually long this, all right? And same thing, vice versa. So let's take this trend out. This is a clean chart, by the way. I usually don't like how people's charts look, but this one's nice.
Thanks,
So
bro.
yeah, no problem. So here's the the fail of that area, right? So again, let's look at it completely differently now, right? So
And so also basically it's like right there in that right before November, that excess low. It was also like right next to the excess lows from before in April for before the run up.
yeah, exactly. So hold on. Let's pull it back here. Whoa. Whoa, what the hell? Chill out, Mac. All right.
Yo, he was about to make a beat. Chill.
So in this area, in this range right here, um it's the same thing, right? So let's say
Mm,
we spoke about the seasonality from 13 to 14
yeah.
and we knew what was going to happen, right?
Mm,
So 14 happens and then you have January to April again. You already know that it's going to be likely topped out until, you know, later on in the year.
yeah.
Um so it would be the same thing. Let's say you started to short in March. Right? Oh shit, this is March. Perfect. Let's say you started to short in March,
Hmm.
right? Because you understood seasonality. And then it comes up and you're like, all right, April's around the corner, taxes have to be paid, money's going to be coming out of the market, right? Remember, this is a price increase, right? If you're thinking about value increasing, this is a increase of value, right?
Yeah.
Technically.
Hmm.
But look at how marginal it is, right? See how
Yeah.
marginal of an increase this is? That's when things change because now the lows have the ability to be tested. See that?
Yeah.
So this low is still the low. It's not an excess low. It's just a low.
So it still needs to make the excess low.
Yeah, it would need to make an excess low, which is like here, and that's why you get that
Yeah.
bigger move here, right?
Hmm.
Because there was really no range expansion out of the ordinary for that week. So if you were to start to short here and then it bounces and then it comes back, you're going to retaliate here, especially with this little expansion. You're okay with this, right? Because this is
Hmm.
not out of the ordinary.
Yeah.
Remember we spoke about 150 points. It didn't even do that. See?
Yeah.
Um, so that third position to get to is not hard at all. So back and then it rejects and it rejects and then obviously here, right? Now that you know this is the low as a short, this was your goal anyway,
Yeah.
right? You were trying to get here. You're gonna cover, and that's why you get that retaliation because you already have the three, 1, 2, and then fail third, right?
Hmm.
This technically is the easiest short that you can get. This on a retest is shorts, right? Covering and people buying because this is just a low. If this
Yeah.
started at $100, now it's at 200, now it's at 210, now it's at 220, right? Well, if you short it, you're right back to green here. Back here, you're probably break even ish. And when it goes back down to $100, you're gonna be like, all right, I made 100% profit. I'm gonna cut, and buyers gonna be like, oh, it's $100 again, right?
Yeah.
So it goes back, and then people are like, oh, it's 200 again. Oh, it's too high because now the people that also bought it here, not even the shorts only that covered, but the people that also bought here remembered where it sold, and because the action didn't proceed, it's much easier to short, and that's how you get the excess
Exactly.
low. Yeah. So when the excess low
Yeah.
comes in, remember we spoke about quarterly values, right?
Hmm.
So watch this. I haven't even looked at this chart yet. October. 3 months. You see what I mean? So
Yeah.
it happens in seasons. Boom, October. If you come here in fucking January, the first 3 months, right? We have April, right?
Hmm.
And you have May, June, July. You have August, September, October, so on and so on and so on, right? So those, what the hell? Um, all of those adjustments happen based on a quarterly market value, right? It happens. It has to do with the consumer spending report. It has to do with GDP and all that. But
Yeah.
it's the same exact seasonality every single year, right? So
Hmm.
don't listen to what people tell you because they don't know what the fuck they're talking about. The seasonality is going to happen based on what's happening in growth, what's happening in REITs, what's
Yeah.
happening
Facts.
in with mortgages, right? So you
Hmm.
can always, get that done. and find it correctly. So that's why you'd be comfortable with a short there, and that's why you'd cover there, because this is still low. The excess low is
Yeah.
what you would long, right? So that's just a quick, 1-2. Like, let's just say this was the range, right? Now that
Mhm.
you have this and you know this is the excess low, and it, retaliated from October, which just happened to be quarterly value at the time, coincidentally.
Yeah.
Now you can, look at this and be like, yeah, all right, this range is my low. Let's say you don't have this yet, and this is the
Mhm.
only information you have, right? Let's just
Mhm.
say now you know that this is technically your high,
Yep.
right? So hold on. The hell? Your system is so weird.
Why?
It's just wacky. I don't know. It's just weird.
That
Like, look at
Mac
that. You
shit.
see that? MacBook is so weird. I used to love Mac. Okay, back to here, right? So now you know that this is your low, right? It's no longer an excess low, right? Let's say we don't have this info. This is your
Yeah.
low. We don't have any of this. Okay. This is your high. So value needs to be found, right? Because
Yes.
now this this is your low and that's your high. So you're like, all right, where is value? Well, that's kind of easy to find because you know where the original short positions were, right? So everything that's within that happened with that time needs to be encapsulated. The previous low, right, is now your median because why? The price action shifted down, right?
Exactly.
So
Yeah.
in
So
this
that'll be the
scenario,
middle.
correct. This is now your median. That's your high.
Yeah.
That's your low,
Yeah.
right? Now there's a macro median. So that's where you get a bit deeper in the education. And you're like, all right. So if this is the macro high and the macro low, well, what's the micro high and the micro low, right? Well,
Mhm.
that's a picture inside of the picture, right?
Yeah.
So now we know that this was the previous high. So what's this? This is our micro high. See that? This is
The
our
oh
macro
07.
high. Yeah, that or right about here,
Got it.
right? And this is our macro high. So you
Because
know,
that was the first short that was taken.
correct,
Yeah.
exactly. So now you know this is a short or
Yes.
an area in which you can short.
Because they're going to defend their positions no matter what, and they have the
Exactly.
backup from whoever was higher.
Yep. Yep. Yep.
Yeah.
So, because technically with this information, we don't know where the median is because it didn't, that macro median, because it didn't find value, right? It lost value
Hmm.
and it never established it again, right? So let's
Yeah.
just take this information here. If this is all we had, and we know this is the high and this is the low,
Hmm.
well, then it's the same story because now this is the information we have. So let's just tailor that to our liking, right? Um, Remember, I mentioned when a short position gets encapsulated, you have to like reset the number.
Of short positions. Yeah. Right.
Yeah, yeah,
It starts back
exactly.
at one.
So exactly. So let's say this was the first one. This is an encapsulation
Yeah.
technically, but because it's so close and there was no real range expansion, again, you can count this all like as one,
Yeah.
right? I would mark it only because it was important at the time. So then obviously you have this test here. Remember the high of the high
Hmm.
is an excess high. So in this scenario, that rejection would confirm where your second short position was, right? And notice the candle sizes of completion with these and these not the same, right?
Yeah.
This range is shit in these. These ranges are good because you knew the follow through was there. The only
Yeah.
reason the follow through was there was because it was already a short position there, so it's just
Yeah.
easier
So
to
it's just
add.
joining.
Exactly, right? So in this scenario, this position needs to be taken and held to get to this one technically because these two are the same.
Hmm.
So when you get this bounce, you remember I said the second move is the move that you want to catch, and the third
Yep.
move is the one that you want to hold.
Yeah.
So here is where you're gonna cover, right? Because now you know where your low is. You're gonna
Yeah.
cover most, if not all, and then you're gonna re-enter on the test of the third, and that's where you
Exactly.
get the biggest move.
Yeah.
Okay, so
And then
here,
obviously, if you're playing this macro, your stop would be that excess high.
Your stop would be the excess high, exactly. Because over that's where you're gonna get a buyer's retaliation. It's gonna really push the price to levels that you probably can't calculate. So yeah. So this is what's important. This high is actually not important because it was just a test to see if it could hold value at the time.
Yeah.
Right. If this held, right, then it came down to here, it would now be a micro median, right? Because this low would move up. So this would be the low in the micro, but this would make this the actual like median, and then the low would be somewhere here because this low would then move up. Right?
Yeah.
So all those things like change. So then hold on. All right. So we have all these positions here. Now you have like a clear understanding as to what's going on. We don't know any of this information. We don't know where the median is yet.
Yeah.
So you see this big buy, this big retaliation, because this is a discount, right? This is an extreme discount of the low.
Yeah.
So as the price increases, you see a big buy here, then it rejects, then it buys here, cracks it, rejects, comes back up, right? So that's important because we knew that it tried to find value, but it didn't technically find it, right?
Yeah.
But it rejected it, right? So now when you're looking at it, this is the high of the low. So this is actually a markup for down here, right?
Yeah.
So when you're looking at it now, this is your macro high. This is your macro low. This is your micro median. That's your macro median. So now this range here is a range you don't want to trade too much, right? Because it's in between the two.
Mm-hmm.
If you long on one of these days or short on one of these days, it's probably going to take longer than you think. It's going to crack into the range and do some bullshit, just like it did.
Yeah.
Right? Hey, guys, let's hold this position. Boom, next day, you're fucked. Well, next week, you're fucked. Comes down. Oh, it's short, baby. It's short. Boom, next week, you're fucked. Right? Because that's the picture coming together. It still needed to find value, and it didn't have a chance to, right?
You said 86 was the macro.
All right, so if this was the macro median, right? This would be
Yes.
the macro, like micro median low, technically, right? But you don't want to get that drastic. You don't want to confuse yourself too much. You want to like this basically range is your macro median range. This is the high of the macro median, and this is the low of the macro median.
Yeah. And anything above that, long.
Anything above this, you long. Anything below it, you short.
Got it.
Right? So this is your macro median range, which is great because once it comes up here, likely if it's on a daily, likely if it rejects it or something, you can catch a short, and that's probably where it happened here, and then retaliating back up, et cetera, et cetera. But generally this will be a discount for the macro median, so you may be able to, and it's a markup for the macro median if it's going the other way, et cetera, right? So this is just on the 4 hour, so I want you to see exactly how it reacts and respects to those same exact levels there. See that? Bounces right off it, runs, bounces right off it again, runs. And we didn't even look at any of this. I'm just showing you like it's the same thing. So now this high here, right, is the high of this, because this is no longer an excess high once it's tested, right? This is an excess. It wasn't excess from the beginning, really, because there was no range expansion. It was like fucking, what was it, $20?
Yeah.
That's not a real range expansion. As I said, you want to see like 150 points ish. Again, so as this comes down, now you know that this is your low. So anything below this low would be an excess low. This is the low of the low. This is an extreme low. This is an excess low. Generally, when I have my excess lows, I change them to like orange, just so I can know like, hey, I'm hitting this no matter what. But that's me.
Yeah.
So we'll just leave that right there. So that's an excess low. All right. Now that we have the entire picture, so your macro median, high, well, your macro high, your macro low, your macro median range. This
Yep.
is the high of the macro median. This is the low of the macro median.
Yep.
Any hold above this on a daily or on a 4 hour, you long, right? If it's, coming down and holding it, anything above that would be in excess of the macro median, which is your high. Does that make sense?
Yes.
Yeah, so it's
And
in
it,
excess of this value range.
yeah, but
Right.
not excess of the entire macro. So it's still
Exactly,
going to be
not
short no matter what if you get up there.
exactly. Yeah. So this is in excess of your markup from the low, and that's completely different than being an excess from like here if it holds, right?
Yeah.
Because this is no longer an excess.
Yeah. Yeah.
But from
It's
here,
going to go find new value after that.
exactly, it has to find value again. So yeah, so once this is established, right, that's when we could, hop into I don't know what daily you have. Oh, perfect, daily 10.
Come on, bro. You know the vibes.
You know the vibes. So we hop into the daily 10, and you can see the picture much clearer this way. Now, right?
Mm-hmm.
Look at that story.
Yeah.
This is in excess of this median. That's a short.
Yep.
Excess, short. Excess, short again. Short again. Right?
Mm-hmm.
Comes up, excess, retest, high of the high. Right? This is the
Yep.
high of the high. That's an excess high of the median. Short again. 2 days in a row. Encapsulation happens here. Excess, short again. Right? Retest here.
Yep.
Boom. Then it holds. So now you have completely identified your actual macro median. See that?
Macro
So
median or the micro median?
macro, the Mac. This is the Mac because remember, this was the high of your macro median.
Yes.
This is the low of it. This is the
Oh,
actual.
so that's the Oh, okay. Got it. So that's the
That
middle of the middle. Got it.
exactly.
Got
This
it.
is
Got
the
it.
actual level
That's that
matters.
John.
Yeah. Right. And we're not even going to go to the right yet because I don't even know what it looks like. But I'm just going to show you what the way that you would find it chart. What the yo. I swear to God.
Yeah. I'm not looking.
All right. So this thing wants to fucking snitch. See what's going on. You and your MacBook.
You know.
Okay. So now look, people are gonna be like, "Oh my God, look at this. Is this a head and shoulder? No, the shoulder's kind of messed up. No, you're an idiot. You don't know
Yeah.
anything. It's
Nah,
okay.
that's funny.
Right? So here,
Yeah.
now if you look at this and you know the story, how much easier is that to read? Right?
Yeah.
Once it loses value here, you know that it can't go anywhere but the low.
Mm-hmm.
So you can swing a rejection here for a week, 2 weeks.
And just let it rock.
Exactly. Right? Because you already know nothing really matters until it holds this level. Notice it holds this level and it fucking runs.
Yeah.
Now look at the range, right? Once
That's
it
range
gets to
expansion.
2107, right? 21 remember over 150 points. This is a range expansion.
Yep.
So now the low or the macro, which this macro median actually turns to the high. So this orange now goes here because you got range expansion, so the value increased.
Mm-hmm.
So this is actually this line. This one moves up. This one, right?
Yeah.
Moves up. This one's orange, and then it comes here. See that? Now this level here, this level right here, is this. This one is orange. What the yo? Okay, that one's here. This one's orange now because this is actually the macro median on a range expansion, right? And this one's just white. This one goes back to normal, right? And now this is technically an excess low of the macro median. See that?
12 would be the low.
The low would be somewhere around here.
Ah.
The actual low would be like around here. Anything below this would be extremely excess, and it would be really hard to get down to. Something tragic would have to happen, right? So the low would be somewhere around here, around 17, 7. What am I talking about? Like, yeah, somewhere around here. 18. My bad. This would move up to here, obviously, because now you know that it's happened. It's kind of also like an accumulation, excess low, high hit, da da da, boom, boom, boom. Range expansion.
Why would that 31 level move up though?
This
So,
one,
yeah, to where would it move up?
this one would move up for whatever the range was expanded to. That's why I said it would be somewhere around here.
Oh, okay, I
Yeah.
see. Okay, I got you. I
Yeah,
misunderstood.
so
that.
like this is 2134 to 2190.
Yeah.
So an additional 50 to 70 points. Well, what was the last high? Yeah, so from here to anywhere up here.
hmm
So this would move up like 50 to 70 points.
Got it.
So it'd be like around here somewhere.
Yeah.
Which makes sense if you look at the chart.
Yeah.
Right? This would be an extreme low, bro.
Got it.
Extreme. Like something bad would have to happen again. And as you can see, look at this volume. And this tells you like, whoa, 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 whoa. This is a little much, buddy. Right?
Yeah.
Because this is now the excess low of the macro median on a range expansion. So here, I love this because that seller's retaliation is really telling, right? So we have this.
Yeah.
They fail. They finally get the value to fall out. Boom, comes up again. They're like, fuck it, short it again. Taps. They're like, oh shit, it's here. Boom, fail again. Then they try it again. Boom, and tank it, right? Because 1, 2, right? They never actually got the third position. See that? They had the follow through. This one here, they could have just continued shorting over and over, but because it had a new value low, they didn't have the ability for shares to come back into here to push it down and keep it down. So now you have 2 here. Let's take these out. Let's say this is all the information that you had.
Yeah.
You got 1 short position here, 2 here. It's supposed to come up and test the second, never did. So they were able to push it down further. So now when it comes here, right, it's actually finding value because now it's increasing as it should. If it would have happened here, then it would have happened faster, and then the retaliation wouldn't have been, they wouldn't have had the ability to hold it up as long.
Yeah.
So now when they try to get the third here, it gets a little bit, but there's no range expansion, so they can tank it, but then it holds that previous, and that's where you get the increase. So now you got a third position again, and that's why you get that big response, because you have the whole thing here. And what did I mention? Summertime, market dies.
Yep.
We got summertime again. And what month is it? Huh. How interesting. Q2 again. So seasonality, knowing where it is, etc., etc. Let's continue. Range expansion happens here. You don't short this. This is the high. High of the high. Technically excess high. No range expansion. Short position number 2 in this scenario. Because remember, this was a high. This was the first. This is what we call a. I'm so tired. I'm sorry. This is just the first short position, but it's kind of like pre-exhaustion. There we go. I don't know what the fuck's wrong with my brain. This is pre-exhaustion, right? Buyers are exhausting. Sellers are also adding. All right. Remember, this was previously the high. This was encapsulation of the last high. This is the high of the high here. That's the short. He got encapsulated, got smoked, right?
Mhm.
So if we were to play this like a little brain, right? Come here, and you'd be like, oh, all right, once it gets over here, I'm just going to short it. Again, you're an idiot. Range expansion is still happening, right? The only thing you can do is short the high of the high, and that would be here.
Mhm.
There you go. Because this is the excess high technically. But you can't be comfortable with this because there's still no range expansion, right? This is 6 points.
Yeah.
So now you're in a pickle. You get a price increase again. boom, high, boom, not a high of the high, excess high, technically, with a $20 range expansion. Bigger reaction now, right? So now you got a drop that's 20 points, right? That's a little bit better. But again, still not the range expansion we're looking for. High of the high, technically excess high. Same shit again, but now look at the range. Much bigger, right? So your pre-exhaustion happens here. Second retaliation happens here. Happens again. Let's go over this again. Uno, dos, tres. Tank. Where does it fall? Falls based on the range expansion at the now previous high. See? Because of that range expansion, that median, this one on the range expansion, moves up. So this is now a low, and the story continues to go. So if I were to now do this now, today, let's go to the daily or the 4 hour. I don't give a fuck. Doesn't matter. But let's go. What time frame do you want? We'll do it on any time frame.
Just do daily.
Okay, we'll go on the what? I promise, I probably will never open up my MacBook again.
Yeah.
After using yours, I'm good. All right, so now let's just say we're going off of this year. This is the only information we have. Technically, this is not this is January 3rd. Okay. January 3rd, whatever. That's our high. And here we have our low, right? Now, hold on. We need to make an entire picture based on what's happening, right? So here's the high. Oh, no, here's the high. Here's the second high. Here's the high of the high, excess high, first pre-exhaustion, second attempt, high of the high, short position, right? So fail, and then this is just a second. But what did I tell you? January to April, same exact thing. It's just January. All right, that's it. It's just January. Okay. January to April. Here goes April. Boom. Here comes the summertime. Same exact seasonality, right? So let's just say there were 2 short positions taken there. We don't really give a fuck because we're nowhere near here. Let's just be honest. All right. This is the first place in which it tries to find value. First place, right? So one thing I want to do is say, what was the first biggest short position that caused the biggest reaction on the chart? Well, it's right there. Tries to find value here, bounces, fails, right? This is the fair value fill that I speak about all the time. Here's the halfway mark of that big high reaction candle. So that's the fair value sell. It just happens to be, around the end of the quarter,
Wait.
into the year. Just saying.
Every fair value.
No, they don't always get filled.
I know, but it would always be like 50%.
It'll be around 50% of a high reaction candle, yeah.
Okay, all right, thanks.
Yeah, at or around, yeah. So this just happens to be at the end of the quarter, right? Just happens. I don't know, maybe. So there's a fair value fill there, and that's a continuation, right? So this is the first place where it tried to find value. Let's not give ourselves any answers. So here it goes. First place to try to find value. We're marking that as it's happening, right? And if you had the information before, you're like, all right, well, I know it's going to come up to here at least, and if it holds that, I can relong for a test. Never happens. Short continuation happens, right? Boom. So now it needs to find value because technically it's creating a downtrend, right? Here, let's go based on here, right? So high, fail, short, tries the high of the high, excess high, boom, 1. High of the high, excess high, boom, 2. High of the high, excess high, boom, 3. Comes down, tries to find value, right?
Yeah.
Now this, if we're going extremely micro, let's fuck all this. Hold on. Before we even get here. If we're going extremely micro, this is your high, This is your low, right?
Yeah.
So it needs to find value. This is the high of the high, technically an excess high with no range expansion.
Yeah.
Right? This is still your low. So where's the place where it tries to find value? I don't know. Maybe halfway down a fair value fill of a previous high reaction candle, which is right here. See that?
Yep.
Fair value fills right here. Okay, cool. Boom. This is the low. This is technically our median at the time because there's no defined range. Right? Cracks up above the median.
Bruh, so then you just short that. Yo.
Exactly. Yep. This is technically an excess high of the median. This is the high of the high. Short. Right? It cracks and now it tries the whole value for the first time since the fail. Right? Crack, high of the high. Basically no range expansion, but there is. Right? That's why the value increases because it has a harder time getting to that low because the price increases. Right? So now anything below this will cause a reaction here. Let's just say we don't have any of this information and we're like, oh, right? Boom. So now here, now we have this info. We know it tried to find value here. Here is our micro range again, right? So then you have to find what's your macro median at the time of this micro range.
Yeah.
Right? Anything above this, if on a hold, likely you can long. Anything above this high in this time, because remember, this is the macro high, is an excess high, right? So this is an excess high of the median, right? So you want to short the high of the high. There it is. Now there's the macro median low. It's coming down to find support. Guess what? Big ass green candle. How did that happen? I don't know. Right? Same exact thing. Down red, up green. Same thing. Right? Through this candle on a close, run. Below this one, short. This one holds. You may not want to take it on the first day. Maybe not, right? Maybe next day it opens and you're like, well, it's the macro median low. I can test that, or I can long the excess low of the macro median, which would be the low, right? So anything near the low, you're probably not going to get because of this range expansion, but you can risk this range, which is about, I don't know how many points, but we're talking about swing here, right? Not a day trade, because day trade is just one candle. So once it gets back to here, you definitely want to scale here. I don't care what this candle tells you, because likely this is not going to happen.
Yeah.
Right? You want to scale here, comes up again, right? It's not an excess high of the median anymore because it needs to crack this. Remember, if this is the high, these were our pre-exhaustion, and we had 1, 2, 3, boom. Let's say this is on the macro, one short position. The second one was taken here. How do we get to the first if the second one's right next to it? You don't have to. You just have to crack the second one because they're twins. The ranges are so close that you encapsulate both shorts, which is why you get this huge reaction.
Yeah.
Now this is what? A seller's retaliation. That's why you get the move, because below this short, as you can see here, it comes down and they're like, oh, let's cover some, boom, boom, boom. Oh, let's cover some. What happens? It bounces and it goes right back to that third short position. So once they get it under it, now you can flush it. And that's how you get your excess low. So this is just the micro of the macro.
Yeah.
Now, right? So that's how you would play that range. Same exact thing. So let's just leave this here because who knows if you're gonna need it. So let's just say let's continue to move on. Now let's say this is your extreme low. This is the first low you have. That's your high. This is your high. Okay? We don't have any of this shit yet. This is your low. This is your high. What changed? Can you tell me what changed? Just guess.
Hold on. I wanted to say that value moved lower.
Exactly. Good shit.
Yeah.
So the macro median range
That
is
moves
now
down to
lower.
that range. Yeah.
Exactly. So this doesn't fucking matter. It
Yeah.
matters. But now this is your macro median range because it expanded. You got range expansion to the downside.
Yeah.
Right? This is your low. This is your high. This is your median. That's sexy because you don't really have to figure it out because you've already done it because
Yeah.
of this. You knew it was the low before and it lost value, right?
Mhm.
So now what? If this is the low, anything below this would be an excess low.
Yep.
And anything that comes from here to here is a macro median high, which you short.
Yes.
So high of the high on an
Shorted.
excess high, short. Right? High of the high, excess high, short. The cool part about that is that this is position 1 in the macro median. This is position 2, so you got the bigger move. And on the third, once again, this is an excess high of the previous high. So you got this. So you see how the range changes drastically every time. The first time it was this.
Yeah.
Second time it was this. Third time it was fucking this. You see what I mean?
Yep.
Now, having levels is not fucking important. I know I say that all the time. Yeah, like, yo, levels aren't important. What's happening in the levels, what's happening during that story
Facts.
is what's important. Everything else doesn't fucking matter. You could have every single one of these levels, and we're going to play it completely differently. And you're going to see it completely differently than I see.
Mm-hmm.
And people are going to be like, oh, well, I think it's long. Well, you're wrong. I'm going to tell you, like, it's not right. It may go up for 20 seconds or 30 seconds in your scalp, but the picture is not changing.
You're
You
wrong.
hold that position, you're likely
You're wrong.
Yeah. Right?
Yeah.
Bet more.
Bet more.
So here is the high of the highs, the excess high at this range. Here, obviously this is important. I forgot we spoke about it, but it's important for some reason because I marked it. And then here
I was
comes
just the
down.
low from before, yeah.
Yeah. Here's the loss of value here, right? So now you do the same thing. The difference is this is now your low.
Mm-hmm.
Instead of that, this is your low. So let's do that again. So now this is your macro low, right? And if we didn't have any of this, now this is the micro median low. That's
so now your
still the
median
macro.
that big?
The micro median low is just this line right here.
Yeah, and then where would be the macro
micro
median high?
is here, right? I mean, yeah. The micro median low is here. The micro median is here. The macro median is still here. The value fell, and you got a range expansion, but this is still your high. The high never changed. So now you have this big ass, you have this low, and you don't care about this anymore because you're nowhere fucking near it. Yeah. This is your high. See that? Now this guy is your high until this gets encapsulated, and then you get to move back.
Yeah.
So now this is your high, and this was your low. This is now your median, and this is your low. That's why it's the micro median here. And this is the macro low. Does that make sense?
Yep.
Okay. Now this is your micro median high, or your micro high. Same thing. This is your micro high. This is your macro high.
Yeah.
But again, this doesn't matter because you're nowhere near it, and this is your high as the low fell out.
Yeah.
So now you'd basically do the same exact thing, and find value that way.
Mm-hmm.
Do you have any questions?
Nah. That's clean.
Yeah, it's just about like.
I'm just gonna like have to take time to like figure out the labeling and how I'm gonna like move them up and down.
Yeah, because mine are like different colors, like I said.
Yeah.
Like my high for every range, like my micro high is red, my macro high is red, my excess lows are orange, and everything else is blue. I don't give a fuck about anything else. I want the excess lows, the excess highs, and the macro micro medians, because those are going to give me my biggest moves and or give me the best scalps I can potentially take, or the best swings I can potentially take. If I know this is the micro high, or at the time the macro median, I can short that. I'm not just going to short it today. I'm probably going to get something that's a little bit further out and just let it lose value, et cetera, et cetera. Knowing me, I'm probably going to cut it the moment I'm up like 50% on the day. But I'm just saying, like, if I'm swinging commons, that's how I would go about it. But if I'm doing options, I'm out. I'm out before any of this happens. I'm taking my money. But yeah, just if you have any questions, as I tell you all the time, I tell you guys all the time, just fucking call me. Like, don't send me a message. Just call me, because it's gonna be way too much to try to explain over a fucking message. Right? So like, we got whoever ask Peanut first, and then ask me, but you guys have me directly, so like you can just ask or just call me. But it's the same thing, right? And you have my number, so it's different. But that's how you would go about it, bro. And like, realistically, we already spoke about these levels. Like, I tagged it today in the chat. Like, bro, like, we've been speaking about this for a week, 2 weeks, 3 weeks. The levels have been the same. Nothing changes at all. Anything over 77, we're short. Period.
Yeah.
No ifs, ands, or buts. No explanations. Like, you're trying to long over that. If I was here, I would have told you, like, that's just not happening. But it happens, and like, it was. I'm sure it was a weird day, because it probably popped up over 77 fast at first, and then jolted down, and then popped over, and then jolted down, and popped over, and jolted down. But that's just because, like, in this time, like, likely look at it. Like, this is your high, this is your low. Like, this is your micro median range. The micro median's at 77, which is like right here. And it's tied to the same exact level. This was the high. This is the high of the high. It's tied to that same.
And it's right there at the fucking the macro median.
Exactly.
Or the micro median at 12.
The micro median. This is an excess of the markup right here.
Yeah.
You cannot long that under any circumstance. And it's actually, like, kind of crazy to long that, especially like looking at this.
Yeah.
And knowing, until it holds over 77 and gets over that, then like, you're playing with fire, Yeah. And we all make mistakes. Fucking, I make mistakes all the time. But that's just what it is. So we knew it was 77. Then I think it was like 55. I don't remember what they are. I have them in the chat. And then under that was 41.38. Right? Richard Durrett said he longed that 30 or something.
Yeah.
That's a good long, because it's in excess of that little macro intraday range that we had. Right? So we knew that 38 was a good level to long off of. And if you wanted to short, you could have shorted from 77 to 38 easily. But yeah, I think you got it. You just gotta, you know what it is? When you go over something and like you start adding like a lot of things to your shit, as I told you earlier.
Yeah.
You start to move away from the actual like core of what it is that you're looking for. I just know that because like when I would play Gears, I was a fucking amazing sniper. And then like once I realized that I could be a slayer, my sniping like kind of like got a little not bad, but it was just like not as good, and then I started to realize like, oh shit, like I'll just do all and just try to be, good at all. But you start to like lose some of that skill and some of that, reaction time for what it is that you used to do all the time and only do that. So just go over it and just keep messing with it. Like I can show it to you on any time frame and it'll be the same thing. I don't know what 30 this is, but I can show it to you on any time. Wait, what? I just saw the one. Yeah, it wasn't even a session, Phil. Like I don't even know if hopped in here because Angel was in here by himself, but we were on like a private call. But yeah, same thing, man. Like, look at how much I didn't even draw in these recent ones because I think we stopped like before this.
Yeah.
But like, all this is still the same. Like, look at this on the hourly. Boom, hourly short again, hourly short again, hourly short again, short again. Even if you would have did this alone, not obviously this isn't today, right? But during this time, look, short, boom, tries to find value. Like, just here, this is your low, this is your high, this is your median. Boom, boom, right? Anything under this low is an excess low or near it, right? Low, low, long, median, excess of the median, short, boom. Position 1, position 2, boom. Position 3, boom. Retest, fail, and then follow through. Same exact thing.
Yeah.
And this is an hourly chart, right? So you can get really, really micro with it if you wanted. You could go on the 1 minute, find value the same way.
Nah, get that shit out of here, bro.
I'm just saying.
Imagine.
You go on the 1 minute and do the same thing, right? So here's the high, right? Here's the high of the high. Well, near the high of the high. That's excess. Here's the pre-exhaustion right here. That's 1, right? Comes in here, tested, fails. Doji 2, crack of trend on the 3rd position. That's death, fail. Same thing here. This is the low. This is the high, right? Tries to find value here. Comes down. Excess low, long. This is the 1 minute. You know what I mean?
Yeah.
So yeah, and here like, again, this is the short position. This is the high of the short position. This is the high. This is the high of the high. Short again on the 1 minute. Same thing. You're just finding random times and doing the same thing. You know. Here, high of the high, short. Right. Test. Short position 1. Fail. That's fine. Boom. Never happens again. No reason to even attest. You just hold it. This shit was never even tested again.
Yeah.
Later on in the day, though, right? Right, there it is. So that's the second attempt. How do I go to the right on your Mac? Nest. See? Follow through is even stronger on the second attempt, as I say all the time. So if this is the first short position on a 1 minute, just say you're looking at it on a market profile, it comes down, comes back up, boom. That's 2. Bigger follow through. Let's see if they get smoked or if they have the move on the 3rd position. Nope, they just tank it. So again, the second position is hella strong. You could always find a move off that, right? Oh, actually, it was the 3rd. It happened actually here. See, this was the first low. That was the excess low, long. And then there, that's where it happened. That's where the first short position happened. See, happened, boom. That was the low. Came up. Look, even on the 1 minute, half of the high reaction candle looks right here. Rejects, comes up, boom, down, new low. Technically, excess low, low of the low, long again. Short position 2 happens, boom. And then you get a pretty good follow through, right? Comes up, 3rd one, boom, tank. Tank, right? Here's the low. Here's the low of the low. Never want to short, or you never want to try to be the first on that. There's the excess low. Buy it, boom. Stops that entry, comes down, cracks it, excess low, long again, comes back to your previous exit or stop, cut it, comes down, hold, encapsulates the short, back here, right? Scale, boom. Obviously, your goal would be there. And that doesn't happen till fucking 10:30 in the morning. So I mean, I personally wouldn't want to hold that, right? To get here, but once it gets there, look at the reaction. Look at that. Like, what the fuck? Hold on. Look at how big even in this range you can see this. Look at how big that and fast that move was.
Yeah.
2 short positions. Look at how fast that was. Excess low. Look at how fast it ran through it. because these are all coverings here. You know that.
Yeah.
So just about what the faded.
Yo, my boy.
My
Yo,
bad.
chill.
My bad. Right. Same thing. 1 minute, 30 minute, 40 minute, daily, hourly, 4 hour.
It's at 40-minute, yo.
Yeah, it doesn't matter. But you got to be able to find value in the right way. Understanding seasonality, understanding where you are in the year, understanding what's happening with growth, what's happening around the market, et cetera, et cetera. All that matters. Like you could do this on Commons, you could do it on whatever the fuck it is that you want to trade. You just have to know what is happening and how to completely help yourself understand what the story is trying to depict.
Yeah.
You know? So again, I don't know if you recorded this, maybe Angel did.
I did.
But if you
Did you?
didn't,
Yes.
me?
I did.
Okay. So then
That's clutch.
Yeah, you could send it to Faded then.
Yeah, because I need to study it.
Yeah, make the video private.
Bro,
and
I
just send it
record
to Faded.
everything. Like literally everything.
This guy.
Like that one time that we were speaking, James, like it was just us two and then people started joining in. I have that recording too.
That's fine.
Send that to me too, real quick.
Y'all are wild.
I need that.
So send Phil and Faded this video.
Yeah, I got you.
Yeah. Aight. That enough.
Appreciate you, bro.
We're supposed to get up at 10:30. It's
Yeah, my bad, bro.
It's a little. Nah, you're good.
Apex.